China took steps today to retaliate against the U.S. It announced it will raise tariffs on $60 billion worth of American goods beginning June 1st. That's in response to the White House's decision last week to hike tariffs on $200 billion in Chinese products. Here's a reminder of how those tariffs work. A tariff is essentially a tax. Governments implement them on goods coming in from another country. So let's say an American company buys 100 washing machines from a Chinese company. Each has a price tag of $500. So the total cost is $50,000. At the border, they face a 25% tariff. That means an additional $12,500 is owed. But China doesn't pay that amount. The American importer does. Who collects the cash? U.S. border agents at 328 different ports of entry, and the proceeds go to the U.S. Treasury. The idea is to encourage domestic companies to buy local or perhaps from another country. Often, though, the company just passes on the cost to the consumer by raising the price of that washing machine. In fact, new research suggests President Trump's tariffs increased the cost of washing machines by 12%, or about $86 to $92 more per appliance. The president is now threatening more tariffs after China announced its retaliatory measures earlier, with neither side appearing willing to back down. Global stocks are sinking over the potential impact on the world economy. Could this trade war trigger an economic slowdown? Dan Utso is an international trade lawyer with Dickinson Wright, and he joins us via FaceTime from Detroit. Brett House is Deputy Chief Economist at Scotiabank Economics, and he joins us from Toronto. Hi to both of you. Great to see you. Really appreciate your time. Let's talk about the escalation today. Dan, why don't I start with you? Do you expect this is where it ends, or is there more to come?
Well, I think we're not sure if this is even an escalation yet. We've put the list out today of an additional $300 billion worth of tariffs, and it gives us till about June 17th. So I think we're certainly on the trajectory of escalation. All of our clients and companies, that's what we're spending all day and frankly have been for a number of weeks now getting ready for this moment. But there's still about 30 days here, and we're going to see if the parties can come together and maybe work something out either in the lead up to that or maybe shortly thereafter. But I think companies need to buckle up and get ready because this is going to be a bumpy ride.
Given what's at stake here, Brett, how likely do you think it is that there is something worked out in that time frame?
I think there's a decent likelihood that some kind of compromise is reached because in many ways, the Trump administration hasn't tested the American public's appetite for tariffs yet in a meaningful way. The first round of tariffs that they imposed on about $50 billion of Chinese goods didn't hit consumer goods at all. The second round that they just raised tariffs from 10 to 25% on still only hits about a third of consumer electronics coming into the U.S. from China. It's this last round that Dan just mentioned that is the real point where the rubber hits the road, because it would imply 25% price increases on iPhones, Galaxies, tablets, cameras, things that people will see immediately in their pocketbooks right as we head into the 2020 election cycle.
Dan, how long is it before those would actually hit, though, right? It won't be right away.
Right. Well, there's a hearing scheduled, so there's an opportunity to comment on those. And, our companies, just like we did last summer, try to get your product off the tariff list. That was successful in some regards, but there's not going to be a lot of wiggle room there. So, and then it'll be whether the president wants to impose those sometime late June, early July. And I think Brett's spot on. By the time we go into the holiday season, these tariffs, if imposed, would be in full force and effect on consumers. So this is a very important 30, 40 days. I know it seems like since the Trump administration came into office, we keep saying this month is going to be the most important month, whether it's USMCA or steel and aluminum, et cetera. But this is a critical period for the global economy.
I imagine, Dan, your clients are making the case that it impacts their companies negatively. There are a lot of people making that case, and you could extend that beyond just these kinds of tariffs, but the ones that are affecting aluminum and steel in this country. Why do you think that message isn't working? Because we keep hearing the president talk about how effective they are for him.
Well, I think Brett just touched on that as well. It really hasn't hit consumers yet. So when we're seeing a lot of reports, and certainly that's been our experience on the ground, that these tariffs have been absorbed by the consumer. Well, the consumer is usually a company absorbing intermediate goods. So our companies have been able throughout 2017, 18, and frankly into 19, been able to absorb that cost. They've adjusted pricing. We've been able to adjust supply chains a bit. There have been product exclusions granted, but there's really no more room to adjust at this point. We are at full saturation. So the only way for these tariffs to go is really out to the individual consumer. That's you and I when we go to the store shelves or go to buy that car or go to buy the iPhone, which I actually have to do this week, and I'm in a hurry to do it.
Brett, do you agree that when that point hits, that the political conversation might change as well?
Yeah, I think it will change in a marked way because right now, the Trump administration continues to try to pretend that China is paying for these tariffs. That's going to be obviously not the case as soon as the price on consumer goods starts going up in a marked way later this year on those goods that could be hit by that third round of tariff increases. So, you know, that gaslighting of America that Trump is doing by saying, no, China pays these tariffs, when in fact the incidence of the tariffs is falling squarely on Americans, won't be able to continue at that point. I think the bluff will get called.
And let me follow up with you, Brett, and just ask you about the impact overall on markets. I feel like I'm waking up in the morning and there's futures are getting alerts saying futures are expected to go down by 600. You'll see them fall lower, jump up. What's happening on the markets right now in response to this?
Well, I think markets are trying to adjust to a situation where this felt like it might be a kind of acute conflict between the United States and China, and the realization is dawning that's likely to be more of a chronic situation where even if we get a compromise that moves the two parties back from the brink of hitting tariffs on every aspect of their trade and at higher levels, we are going to see at least some tension in this trading relationship continue for the remainder of this presidency and perhaps onward. When you look at the things that Democrats who are candidates for president are saying, it doesn't represent a markedly different view in some ways.
Yeah, that's a really interesting point, and I just want to let our viewers know that we're having some technical difficulties with the connection with Dan, so we'll bring him back as soon as possible, Brett. But when you're talking about, I guess, the view on China, and I think there are even some players here in Canada that have the same view, that essentially they've gotten away with things that they shouldn't have. Talk a bit about perhaps what the criticism of China is right now.
Well, that criticism is a little lopsided. There is a view that China hasn't done its part to liberalize and respect the commitments it made on joining the WTO in the early 2000s. And there are some respects in which that's true. You know, they have not perhaps liberalized their economy, removed some of the restrictions on foreign companies operating in China that we might have expected to come down by now. But that criticism ignores the incredible progress that China has made. They've brought their tariffs on U.S. goods, for instance, on a trade-weighted basis down by over 2/3 since joining the WTO 20 years ago. That's one of the fastest liberalization processes we've seen for a major economy in the last 100 years. So to say that China hasn't done its part is partially true, but it's not the whole story.
So if we're looking at the possibility of an agreement, and you say that it's not impossible, what do you think the major movement that we'd have to see on China's part would be?
Well, I think it's not just movement on China's part, it's also movement on the Trump administration's part because, any negotiation has to show a win for both sides, and the optics around this are just as important for the government in Beijing as they are in D.C. I think you would look at perhaps a longer timetable than the Trump administration is insisting on for some of the changes that they're looking for. They may look for, understandings rather than rewriting of Chinese law in the way that the USTR has talked about. And on the other side, you would actually have to see some guarantee from the White House that they truly will move ahead on bringing down the tariffs they brought in over the last year or so. And, when you look at the situation on the steel and aluminum tariffs that you mentioned earlier, it's not really a great precedent. We were told that once we dealt with NAFTA 2.0 or USMCA, that we would see the steel and aluminum tariffs be pulled down for Canada and Mexico, and that hasn't been the case at all. If you look at the exclusions Dan mentioned, China's seen over 80% of its exports in metals to the United States excluded from those tariffs. Less than 2% of Canadian exports have received those exclusions.
So what signal does that send you about the White House's propensity to move? I mean, as we've said, the president keeps talking about tariffs as if, in a very positive way. He said it explicitly right after signing NAFTA even.
Yeah, well, it shows that we don't have a very constant negotiating partner there, and that the goalposts keep shifting. As much as people are saying that, China has shifted the goalposts in this negotiating process, the White House, too, has continued to shift what its goals are.
Okay, I'll leave it there. Thanks a lot, Brett. I really appreciate it. That's Brett House. And unfortunately, as I mentioned, we did lose the connection with Dan Utso, but I want to thank him as well for his participation.
I haven't made that decision yet. We have the right to do another $325 billion at 25% in additional tariffs. That is a tremendous amount of money that would come into our country. I have not made that decision yet.
The ink is barely dry on China's retaliatory trade action issued today against the U.S., and President Donald Trump is already, as you heard, threatening another escalation. Earlier, China announced it will raise tariffs on $60 billion worth of U.S. goods, and that's in response to the White House's original decision to hike tariffs on $200 billion in Chinese products last Friday. With neither side appearing to be willing to back down, U.S. stocks sank today over the potential impact on the global economy. So, what's Canada's role in this intensifying trade war? Gordon Holden is a former Canadian diplomat to China. He's now the director of the China Institute at the University of Alberta. And Professor Holden joins us now from Edmonton via FaceTime. Hi, Professor. Great to see you again.
Good to see you again as well.
So I imagine that China's response today did not come as a surprise to you. Do you think this is the beginning of more?
Well, in truth, it's hard to predict the twists and turns of Trump diplomacy. I do believe it is one more skirmish in a broader trade conflict. I think that the chances of avoiding those additional tariffs on the U.S. side are minimal. There are ongoing consultations. We're pretty clear on that. The Americans have an invitation to send trade envoys to Beijing, but I think there's going to be some pain suffered by both sides before we see any serious move towards resolution.
You have worked in China extensively, and I'm wondering from your perspective, we're very focused obviously on what's happening in North America, but how might the rhetoric, the actions, the tariffs themselves, what do you think the thinking is in China?
I think it's hardening attitudes. I was in both Beijing and Washington in April, and in both places I heard tougher language, Chinese saying things like, well, I have an Apple phone, but my next phone will be a Chinese phone. Wariness about the United States who's already there, but just a toughening attitude, a bit more nationalism, and a bit of a sense of we can't be bullied. We'll stand up and oppose the U.S. even if it costs us dearly, which it probably will.
What about China's capacity to retaliate? Like we saw, for example, they're levying tariffs on $60 billion. The U.S. has levied it on $200 billion. Can China essentially or hurt the U.S. as much as the U.S. can hurt China?
It won't be quite as easy because Chinese exports to the United States are far larger, and so they're more vulnerable. It's about a 3-to-1 ratio, with the 1/3 of the total Chinese exports being U.S. exports to China. So they can't retaliate dollar for dollar in the way that the Americans can. So in that sense, the payback might be more limited. But China has a lot of other ways. They've got a lot of levers in that economy. They can make doing business there very difficult. They can encourage consumer boycotts. They can just go slow on U.S. And imports of U.S. goods. There's ways way beyond tariffs that they can hurt you.
And what are some examples of those?
Well, we're running ourselves right into problems with our own exports to China, be it canola, pork, etc. The Chinese will do us the courtesy of saying, hey, this is because of your detention of Madame Meng. We know it is, but it just happens. A importer of canola just doesn't buy anymore. And when you ask, they're told, well, it's insects in the product, etc. Explanations that don't really aren't really credible. Chinese will do the same thing to the Americans for as long as this dispute lasts. And I'm not saying that the Chinese won't be hurt. They will be. There'll be a lot of folks out of jobs who depended upon ongoing Chinese exports to the United States. But I think it's pretty clear they're willing to bear that pain rather than cave.
And let me ask you, you brought up Ms. Meng. The last time you were on the show, you talked about sort of the link between the trade dispute between China and the U.S. and, of course, the detention of Ms. Meng and what's happening to Canada as a result. If this trade war, which seems to be, escalating daily, stays as persistent as it looks it will be, what do you think that means for Canada?
Well, I think it means that less U.S. incentives to help us out, perhaps. If they've got their hands full of China and they're toughening their overall policy towards China, I think it's less likely that they might decide, say, to just let drop the extradition request and let Ms. Meng go back to China. I'm not saying that was necessarily in the cards, but I think it is now less likely. Ironically, if we didn't have our own dispute with China, we might have benefited from filling in some of the holes in the U.S. export portfolio. Some of the things we can export include soya and beef and some of those other commodities. I think the chances of the Chinese turning to us now are small. They'll find those things elsewhere in Australia or the EU or some other country.
I wanted to get your perspective also more specific to the domestic case here. On Friday, we heard the Prime Minister, for what I think is the first time, more explicitly link what's happening with canola to the trade dispute between the U.S. and China. Essentially saying that Canada is caught in the middle. That's not something he said before. He and his ministers have continually referred to the trying to make the scientific case. I'm wondering if you think that signals anything, and if it's a good move, I guess, for the government to start talking about the politics involved in what's happened with our exports.
I think it's an intrusion of reality. I understand perfectly well why we didn't want to go straight away to what is pretty clear retaliation over Ms. Meng. You sort of hope you can tiptoe past it and that it'll go away or they'll change their mind. But now it's out there. I think there's little doubt that we are paying a price for that detention. And I think for the government of Canada to recognize that is simply an acceptance of reality. It still doesn't give us a winning hand to overcome it. But I think that the government needs to be forthright in its comments to Canadians as to what are the causes. And I've got some sympathy for them in terms of how to resolve this, because there's no magic button, there's no incantation that can make those trade barriers go away.
Okay, I'll leave it there. Thank you so much, Professor Holden. Appreciate your time. That's Gordon Holder, Director of the China Institute at the University of Alberta.
Thank you.
Hi, I'm Vashi Capellos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video. Thanks for watching.